There's some interesting things going on. Friday was a buy climax day, and that increases the chances that there'll be at least a couple hours of trading range. But we had that Friday. We had 4 hours of trading range on Friday, and the bulls want trend resumption up, leg one, pullback, leg two, and the bears want a major trend reversal down, like a higher low and then maybe a double top lower high. And then on the weekly chart, last week was an outside up week. However, I think one of the important forces for the rally at the end of the week was to get back above the high of the week from earlier in the week, because on Monday the week opened on its high tick, which is very rare. And for most of the week, the open of the week was the high of the week, and that means that for most of the week did not have a tail on top of the bar, and that is extremely rare. And I think one of the forces that created the rally last week at the end of the week was to make the chart more typical, to have it not have an open exactly at the high, to put a small tail on top of the week. And then last week was also a doji bar that increases the chances of a sideways week. And finally, it was an outside bar, and that increases the chances of an inside week. A lot of times you get a big bar followed by an inside bar, so you get an IOI setup. And because of the outside bar and the increased chance of an inside bar this week, bulls will sell any rally up to last week's high, trying to keep it from going above last week's high. And because last week is not a good buy signal bar for this week, even if this week goes above last week's high, the odds are it will not get far above last week's high before the sellers come back in. The weekly, there are extreme climaxes, buy climaxes on the daily, weekly, and monthly charts. I've been writing about that forever, but I keep saying that until there's a strong reversal down, the odds favor higher prices, and that's true today as well. For the bulls, they're hoping this is just a pullback from a rally, and yes, it's a breakout below a top, double top, lower high, a higher high major trend reversal, head and shoulders top, but it's a tight trading range, not much selling pressure within the range, and therefore we'll probably get an early rally back up to test the bottom of the range. And the bears are hoping that this is a major reversal, a higher high, and they're hoping this is a double top, lower high in a tight trading range. We are 3 minutes into the day, and it's a relatively small bar so far, and it's also spending a lot of time in the middle, so it's fairly neutral. And you can see we're right around the middle of yesterday's range, and which is neutral. So we're getting a neutral open and in a neutral location. Support, 60-minute moving average, resistance, the bottom of the trading range. We have an FOMC announcement on Wednesday, which is always important, and we also have the unemployment report on Friday, both of which increase the odds that today will be fairly neutral, or the week will be fairly neutral. And Friday, we had a strong bull trend bar breaking above a high, and we had a bear breakout here, a bull breakout here, a bear breakout here, and now another bull breakout. The bulls want a good follow-through day today. At a minimum, they want a bull bar, and they would prefer it to close above Friday's high, and the bears want anything but. They would like to get a bear bar, and they would like for the entire week to be a bear inside bar to create a bear IOI on the weekly chart. That would be a sell setup going into next week. As strong as earnings have been and as strong as so many stocks have been, I still think the odds are traders will take some profits at the end of the year. And if we had a yearly chart, which I do not have, that sell-off, that profit taking would probably result in if it occurs, it would result in a tail on the top of the weekly chart. Now, I'm not convinced that we ever went always in short on Friday, and the bulls were hoping that the failed breakout below the head and shoulders top is just a second leg down in a bull flag, one, and then pullback, and then two. Possible low of the day, but resistance above at the bottom of that trading range, support below at the 60-minute moving average. Any reversal, especially a bull bar closing on its high, has at least a 20% chance of being the low of the day. Since Friday was a strong bull day and one is a pretty good bull bar, this has a 25% chance of remaining the low for the rest of the day. At a minimum, the bulls are hoping that the market gets up to the bottom of that trading range, which they see as resistance, and they're betting that there's a magnet at that resistance, and therefore the market will get pulled up there, and there'll be at least enough room for a scalp, and that is a reasonable assumption. Still room up to that 78 low, and today's an important day for the bulls. You know, they had a bull breakout on Friday. They want to get a follow-through bull bar today to increase the chances that we're going to continue higher. The bears want today to be a bad follow-through day, so they would like today to close below the open. If you get consecutive bull bars, especially 3, 4, 5 pretty good bull bars early in the day, it makes a bear trend day unlikely. It might end up as a trading range day, but a lot of early buying reduces the chances of a bear trend day. Probably sellers around the 78 low, the 48 low. Globex chart sideways for a lot of hours, pretty much the entire Globex session. Outside up, failed breakout below the bottom, but it still looks like a bull flag. So bull trend, endless pullback, and the bulls are trying to resume up. Leg one, pullback, leg two. These two bars reduce the chance of a bear trend day. And so right now, traders are thinking either a bull trend day, maybe getting back above yesterday's high, or an early trading range, strong rally, and then a deep pullback. 60-minute support below, so we may be sideways between the bottom of this range and the 60-minute moving average, which would be in the middle of yesterday's range, which is where we are right now in the daily chart. 9 ticks, so a lot of the bulls are scalping or trying to scalp for 2 points. Always in long, but a lot of resistance above. The bulls are hoping for trend resumption up. Leg one, pullback, leg two, but they have a 4-hour trading range just above to break above. And that will be difficult to do. While this is bullish, it's not nearly as bullish as it could be. If this was taking place up here, the bulls would have a better chance of trend resumption up. Still always in long, right? Not a good sell signal bar, but probably resistance up in this trading range. And if we get up there, we may end up going sideways again for a while. Can you sell below 3, a pullback from the breakout below a head and shoulders top? Well, only a 1 tick bear body, 3 tick tail below, probably buyers below. So we're probably going at least a little bit higher. You have to wonder if this is so bullish, why is it here and not up here? So it's not as bullish as it could be. And the odds are we'll probably go sideways between this trading range and the 60-minute moving average, or we'll get up into that trading range and then go sideways up there. Right now, the odds are against a bear trend day. Friday was strongly bullish, and then we have a decent bull open today. A bad sell signal bar 3 and support below 60-minute moving average. However, it looks like it's probably going to be a trading range open, which means probably mostly sideways for the first hour or two. 50% pullback from yesterday's rally, so we're in the middle of yesterday's range, just above support, just below resistance. So a reasonable location for the market to go sideways. You can see 10 ticks above 1, and we sold off. That says that a lot of the bulls simply wanted a 2-point profit. They were expecting a test up to the resistance, but not a strong breakout above the resistance. The bulls were therefore mostly scalping. And that means they're not confident that this will end up as a strong bull trend. Bad signal bar, always in the long, probably buyers at the 3 low. I think the market's deciding, do we go sideways here above support, below resistance, or do we get up here and go sideways at a price level where bulls and bears both thought was a good price? The bears thought it was a good price to sell, the bulls thought it was a good price to buy, and so it's still probably a fair price, and we may end up going sideways up there. This open, the location, the reversal, reduce the chances of a big trend day up or down. And then we also have Wednesday's FOMC announcement and Friday's unemployment report. Both of those are catalysts, and the market often tries to go sideways into a catalyst. Bears have a bad sell signal bar 3 and a bad sell signal bar 4, but we're right in the middle of Friday's range and right in the middle of support down here and resistance here and here, probably sideways for the first hour or so. We had a spike in channel, spike pullback channel. The bottom of the beginning of the channel is also support, which is right around the 60-minute moving average. Still always in long here, so the odds favor at least a little bit higher. A pullback, breakout test of the buy signal bar high 1. But I think pretty bad follow through after the bars 1 and 2. So while the odds are at least slightly higher, bottom of the trading range, moving average, yesterday's close, the odds right now are against a big bull trend day. Let's say we get a bull inside bar 5. Well, I don't think the probability is high enough for a scalp. And for a swing, we're always in long, but we're right below resistance. So I have to say, I think it's not a very good buy, even for a swing. For the bears, a double top test of resistance above, but we're not quite at the resistance. We're not at the 78 low or the moving average. So not a very good sell, not a very good buy, and the result is sideways. You can see we got 5 ticks above the 3 low, and that tells you that the bulls who bought there only wanted the scalp. It had to go up 5 ticks for them to make 4 ticks. And for the bears, they have a small double top and targets below the beginning of the channel over here and the 60-minute moving average. but we have a 5-bar tight range, bad for scalping with stops. So best choice, I think, is wait. If this were closer to the resistance, if it touched the resistance, I think traders might be more willing to sell with a stop, taking a chance on an early high of the day, but it's not. Suppose we get a bull inside bar closing on its high. Still always in long, but we're close enough now to the moving average and the tight trading range low to reduce the probability enough, so not a great looking scalp. Still on a swing buy. Stop probably below 1. Triangle, tight trading range. Always in long, so slightly more bullish, but probably not going to go very far up. We're in the middle of yesterday's range and below a trading range at top, head and shoulders top, lower high, major trend reversal, but support not far below beginning of the channel and the 60-minute moving average. Good bar for the bears, good location for the bears, near resistance, but not quite at resistance, not quite at the bottom of the range or the moving average. So, that lowers the probability. Plus the very tight range lowers the probability for a stop entry, sell below 8 or buy above 7. Best choice here is wait. We're always in long, so traders can be long, stop below 1, but I'm not sure that the math is worth it. I typically would take this sell if it was at the moving average and at the 78 low, but it's not, so I'm going to wait. Failed breakout below the triangle, still always in long, so that makes this a slightly higher probability buy, but it's still a tight trading range, so it's still not all that good. The problem with the buy is the math. Is the probability high enough for a scalp? I'm not convinced that it is. And for a swing, we're right below resistance. We're always in long, so if I'm going to be doing anything, I'm buying. I chose not to buy the 9 high, so I'm still waiting, even though it's slightly more bullish than bearish. Whenever the market reverses up from below a resistance level, it tries to get above the top of the resistance level, which is yesterday's high. Remember I said I thought we would either go sideways within this area, below the trading range and the 60-minute moving average, or sideways within yesterday's trading range, which I think is more likely. And it's still possible that we do not go sideways. It's possible that this could be a bull trend day like yesterday, but more likely we'll end up spending a lot of time sideways. Bears want a low 2 at the moving average, leg 1, and then pull back into a triangle and leg 2. And bulls are hoping for a bull trend day, but they know the odds are against it. 4 hours sideways here, and then 7 of the first 9 bars in a tight range today. Can the bears sell? We're at resistance. I think probably most bears are not willing to sell yet. Some sold the 5 high, some sold the moving average, and they'll scale in higher. Some sold the 78 low. But I still think long is better. Let's say 11 is a 3-tick bear body closing on its low. You still have the problem of 4 or 5 bull bars closing on their highs, and Friday's momentum up. So a lot of bears will not sell below 11, no matter what it looks like. Bears trying to create a good sell signal bar at the bottom of the upper range and at the moving average, but probably at least a little bit higher. We have the next magnet, the top of the range, and the close of yesterday. What will swing bulls do if 11 closes on its low? They might get out below 11, or they might wait to see if we get 2 or 3 consecutive bear bars. This is not the way a strong bull trend looks, and therefore it's probably not the start of a strong bull trend. It's probably a bull leg and what will end up as a trading range. Because of 5 decent bull bars in the first 10 bars, the odds are against a bear trend day. So if we sell off, this sell-off will probably be a bear leg in what will end up as a trading range day. This is one of those days where the open is far enough above support so that a rally may come down below the open and then back up to the open, and the day ends up as a trading range day, doji day. Getting near the end of the first hour, bull bar in a strong 2-day rally, 3-day rally. Okay, so this is not behaving well for bulls hoping that today will be a big bull trend day. Even though it's a 2-legged pullback to resistance, opening reversal down from the bottom of yesterday's range, opening reversal down from the moving average, just too many good bull bars. So I think it's a low probability short. However, for the bulls, it's hard to stay long. It's 2 legs up to resistance. Bears will want a parabolic wedge, and the bulls want a small pullback bull trend day. They have a negative gap here, 1 tick below the 6 high, 2 ticks below the 5 and 3 high, but 1 tick below the 6 high. While I said it would not sell below 8 or 11, if we get a third sell signal bar, then we have a parabolic wedge. That would be a better setup for the bears than the first 2 sells. Big magnet, yesterday's close and yesterday's high and this entire range. And right now the market's deciding, is it going to get into this range or reverse down from below it? Big magnet, chances are we are going to get into that range and we'll probably go sideways there. 16 ticks above 1, now 17. Bears hoping for the opening reversal, and the bulls want to get above yesterday's high and for this to be a leg 1, leg 2 trend. So leg 1, pullback, leg 2, but too many bear bars and this range is too much resistance, and therefore I think the odds are against a big rally, leg 1, pullback, leg 2. More likely we're going to go sideways here. $17 ticks, that's the minimum goal for the 4-point bulls. And the bears want a parabolic wedge, but they'll need another good bear bar. And even then, we have so many decent bull bars today that I think a lot of the bears are hesitant to sell unless we start to go sideways for a few bars. This is the first, I think, decent chance the bears have had today. Parabolic wedge, 17 ticks above 1. So we have some 4-point bulls taking profits. At a minimum, the bears would like to get a 2 or 3 tick bear body closing on its low. And even then, with all of these bull bars, the reversal is more likely minor, and the result will probably be a trading range here than a bear trend. Too many bull bars closing on their highs. Too much buying pressure. I think a lot of the bulls will get out below 14 if it closes on its low, but not a very good looking sell. Big magnet yesterday's close, so I still think we're going at least a little higher. Limit order bears is sold above 1, lost money. Limit order bears is sold above 3, sold more 1 point higher and made money. So probably bears are selling here, scaling in higher. But we got a pretty good magnet, a little bit higher. So right now I think we're going to go higher. If this is a measuring gap, that'll get us up to around yesterday's close, Friday's close. Bears trying to get their wedge. Limit order bears have sold 11 high. We're unable to sell more 1 point higher. Now this is the best sell setup for the bears all day, but it's in a very tight channel, and there are a lot of bull bars and 3 consecutive bull bars. So even though it's a wedge opening reversal and a possible high of the day, I think a lot of bears will not sell with a stop below 15. More likely, we'll go sideways here for a few bars. So I would not take that sell. As you know, I like parabolic wedges on the open to buy or sell, but this one has way too many bull bars. And we have a magnet above, and we have a possible measuring gap here. So more likely buyers somewhere below 14 around the moving average. It's a possible high of the day, but I would wait to see if we start to reverse down strongly before taking this, before selling. That's the wedge, parabolic wedge, possible high of the day. Lower high, major trend reversal, so the bears have some good things. Bull trend, bear breakout, lower high, major trend reversal. But a lot of bull bars and far enough into this range from yesterday to make me think it's slightly more likely that this is minor and that we'll go sideways and try to get up a little bit higher. The bears have 3 bear bars, one closing on its low. They have a parabolic wedge, opening reversal, but even though it's 3 bear bars, I still think it's more likely a minor reversal and that we're going to be sideways here, deciding whether or not the parabolic wedge is the high of the day, or we're in the process of having a small pullback bull trend day, weaker than Friday, yesterday, but still a small pullback bull trend. Most likely we're going to go sideways for several more bars. I still think today's probably going to be a trading range day. Now I think the market is deciding whether the trading range will be up here, like yesterday, or this is the high of the day and we'll get down to the 60-minute moving average and the trading range will be down here. You know, can it still be a bull trend day? Well, it's a bull trend day right now, but I doubt that it's going to continue that way. And with this many decent bull bars closing above their midpoints and at their highs, the odds of this being a bear trend day are small. So if this does begin to sell off, for example, if this is the high of the day, it's probably not going to be much of a bear trend day. It'll probably be a bear leg in what will become a trading range day. For the bulls, there's a 5-tick trap for the bears. 2 legs down, 1 pullback, 2. A bull bar on the 18 sell, so probably buyers below. So we're probably in a tight range here. As I said, it's a possible high of the day. We got a parabolic wedge, opening reversal down from a test of the trading range, but more likely a minor reversal. Deep enough pullback to reduce the chances that today will be a small pullback bull trend day, but it might be a small trending trading range day. Trading range here, trading range here. We're so close to yesterday's close that I think it's more likely than not that we'll get there. And right now the market, as I said, I think is deciding whether it'll be in a trading range up here or in a trading range down here. For the bulls, this is simply a pullback, and what they hope is an ongoing bull channel, a breakout test of the 3 high and the 5 high, which is good for the bulls, a double bottom with 12, but 5 bar bear micro channel. Probably will have to go sideways here a little bit. So rather than straight up, we'll probably get a lower high and then one more test down. Still always in long, but the market's not going very far. And traders are probably mostly scalping and with limit orders, buying the 15 low, buying more 1 point lower, selling the 11 high, trying to sell more 1 point higher, unable, and then simply buying back the shorts around break even. You can see the selling at the 15 low. Bulls either bought it and 1 point lower or simply 1 point lower. So you have bulls selling at the 15 low. IOI on a smaller time frame chart, this might be a wedge down on 17 and then down on 19 and then down again on 20. Not very bullish, not very bearish. The market probably is searching for bottom of this upper range. If instead we break a little bit below, then we'll go down and test support down here. Trading range likely, so bulls buying below things, below 19, below 12, below 9, below 4, and bears selling above things. Will they sell above 21? I don't know. I think they'd rather sell above prior highs, above 19 or above 15. What are the chances that this is the start of a bear trend? I don't know, maybe 40%. I think more likely this is going to end up as a trading range day. And trading range day, traders tend to buy below bars and they tend to sell above bars in the upper half of the prior bear leg. So this is more of a buy zone than a high probability bet that we've begun a trend down. High 2, but more of a limit order market. The bulls above 18 low and 1 point lower will sell here. Stop order bulls, I'm pretty uncomfortable buying or selling with stops when the market is reversing every few bars and the range is small. The limit order bears do not want to sell this low down. when the reversal down is as weak as it has been. Limit order bulls still looking to buy below things. Will they buy below 21? It depends on what it looks like. If it has a bear body, probably not. They would wait instead for it to go sideways a little bit. And for the bears selling the 21 high, it's a high 2. We're still always in long. I would not take that sell. Next target, apex of the triangle, and then the bottom of the pullback. So breakout, pullback, and then wedge rally, 1 or 1, and then 2, 3. Good bar for the bears. We have outside down bar on 20, good for the bears. And we're at the apex of the triangle, but it looks like we're probably going to get to these lows. Remember I said I thought the market would be in a trading range, and that the logical location for the range was either in yesterday's range or in this big empty space between the range and the 60-minute moving average. So we have a spike pullback channel, a smaller version today, spike pullback channel, wedge channel here. And this low is the target today. And then this low from Friday is the target as well, down at the 60-minute moving average. Looks like some bulls might have bought the 21 low, but with outside down like that and targets below, that is one that I typically do not buy. I'd rather buy things like 18 and or 1 point lower for a scalp. And for the bears, it's not strong enough for me to be selling at the low. This is bar 18, and if you look to the left, 90% chance either this will remain the high of the day or this will remain the low of the day. The range only about 6 points, 6.25 points, but probably big enough so that if we do go below 1, still 90% chance we will not get up here. If we go above here, 90% chance this is too far for the market to get back down there again. Right now we're probably always in short, but just like this was a bull leg in a range, this is a bear leg in a range. I would not sell here. Maybe sell a rally, but I would not sell here. This is the buy zone. Big bear bar, lower half of the day. Some bulls will buy that close. I would not, because we still have room to these lows. We're at this low, but I still think we'll go lower. Might get down to the 60-minute moving average. Plus, outside down is a surprise, and surprises usually lead to at least a small second leg down. Bears want to get down to the 60-minute moving average, low of the day, 60-minute moving average. At the open, I said that we had resistance at the bottom of the upper range and support at the 12 low from yesterday and the 60-minute moving average. Right now, it looks more likely than not that we're going to go below the low of the day. Bulls trying to get a double bottom 4, but pretty good bear bar 21, and 22 has a bear body, so not a lot of bulls will buy with a stop above 23. They might buy right here at the 4 low. I did not. This is a strong enough reversal down to make me want to wait for a second entry buy. We may go sideways here and form another tight trading range like this. So head and shoulder stop, left shoulder, head, and then right shoulder. Maybe a low 2 below the moving average. and then one more leg down to the 60-minute moving average. I'm still not talking big trend day. On the way up, I said it looked like a bull leg in a trading range. The sell-off looks better than the rally, but we rallied for 6 points. From the outset, I said today had an increased chance of being an inside day, not going above yesterday's high, not going below yesterday's low, and that we had support at the 60-minute moving average. And all of those things are still true. Accelerating down. Probably going to get down to the 60-minute moving average. Traders are selling the market here, but stop above here and they have to be willing to sell more higher. Can you buy with a limit order at the one low? You'll probably make money, but this is a strong enough reversal down so that I think it's better to be looking to sell a rally or selling at the market than it is to be buying here. If the bulls get a micro double bottom, then there might be room for a bounce back up to the moving average. All of these bull bars early on make a strong bear trend day unlikely, so it's still probably going to be a trading range day, but strong enough down 22, 23, 24. So probably bears will sell the first reversal up and the bulls will need a micro double bottom. Also, we're getting pretty close to the 60-minute moving average, and we'll probably get there, which is around the first pullback from yesterday's reversal up. What can the bulls do 25 to make traders buy with a stop above 25? I think nothing. Even if it's a pretty big bull bar, a lot of the bulls will wait either for a micro double bottom or for a very strong reversal up. Traders are still selling the market, but you have to be careful. We're close to the 60-minute moving average, and a lot of the bears will take partial profits there, so we'll probably bounce around there. Down to support, but falling strongly, and therefore I think you only buy if you're a computer. Individual traders will not take the buy. We're also testing the beginning of yesterday's channel. Should be a buy zone here. I said early on, trading range up here or trading range here, and this is a logical area for the bottom of the range, but when a market looks like this, I think you cannot buy. You have to wait for it to go sideways for a few bars. And for the bears, at this point, if you did not sell up in here, I would wait for a pullback to sell, or for it to break far below the 60-minute moving average and then sell. Should be some profit takers here. I'm going to get rid of this. I don't want too many lines on the chart. What about the bulls who bought the one low? Even though this is a pretty strong sell-off, I still think it'll be a trading range day. We had trending trading ranges here, lower range, upper range, both small. Now it might be a trending trading range with this being the upper range, and this is a bear breakout leading to a lower range. And if that is the case, if we start to go sideways within the next few bars and then stay sideways for an hour or two, 60% chance we'll get back above the one low. I've stopped selling. I'm flat now because the odds are we'll bounce around where we are here. can you buy right here and put a stop, 3 or 4 points down and scale in? I would not. Look at the open of 23. It's below the close of 22, and the same with the open of 25. So pretty aggressive selling. As soon as they see the close, they're hitting sell the market, and there are so many traders hitting sell the market. The open of the next bar is below the close of the prior bar. That is a sign of aggressive selling. I talked earlier about a possible measured move from the high of the day down to the open of the day. That would be here. It's still possible, but this is falling so strongly that I do not have a limit order to buy here. I would wait to see if we start to form a double bottom or some kind of support. It's still sell the close, but I still think we may try to stabilize here or very soon. Some bulls bought the 26 close, betting that the break below the 60-minute moving average would fail. Sometimes I do that, and I thought about doing it here, but did not. And you can see we're up far enough so those bulls made money if they were scalping. Can you buy with a stop above 27, betting that this is just a sell vacuum test of the 60-minute moving average? I would not do that. Strong enough sell-off. The first buys are limit order buys, not stop order buys. And sell the close bears 26. Probably will sell more, 1 or 2 points above 26. But this is the disappointment bar. So they're selling closes, and then they get a bar like this and they're disappointed. And a lot of them now are trying to figure out how to avoid a loss if they sold the 26 close. And the common way to do it is you sell more, 1 or 2 points above, and then you either get out break even between your two entries, or you hold for a test of the low close, the 26 close, and get out there. Strong enough sell off, minor reversal. So even if we go up strongly back above the 1 low, which it looks like we're going to do either soon or some point, the reversal up will probably be limited, and there'll be a test back down. Strong enough bull breakout, minor reversal, even if it's deep. Bulls will buy the pullback. Here's an example of a fairly strong minor reversal in a bear trend. Got one more leg down. Sell the closed bears. A lot of them will get out above a bull bar closing on its high. So if you sold up here, I think if you did not get out already, you get out above 27 if it's a bull bar. And the sell the closed bears who sold the 26 close are not going to sell above 27. They're looking to sell more higher, 1 or 2 points above the 26 close. And the bulls, I would not buy with a stop, no matter what 27 looks like. For the bears looking to sell, maybe 2 points above 26, maybe at the 1 low, minimum stop above 24, probably above 22. And the limit order bulls who bought the 1 low, they like buying more lower above a bull bar, in general, they only want to take that buy if it's at least 2 or 3 points below 1, 2 to 3 times a minimum scalp. And therefore, the bulls who bought at the 1 low probably are not buying more above 27. They're probably trying to get out break even at the 1 low. They may have bought more 2 points down and then try to get out at the 1 low. Sell the close. Bears 26. They have a problem with 27 looking like that and with the magnet at the 1 low and with this being at the 60-minute moving average, but it's still probably going to be a minor reversal. I don't know that we'll get all the way back down to the 26 close. This might be the low of the day. Bulls are hoping that this is like this. What's different here is here we had a very strong minor reversal, and it increased the chances that the next reversal could be major. Here we do not have a prior strong minor reversal, so this is a minor reversal. You can see the selling 9 ticks above the 26 close, right? So some bears who sold the 26 close sold more 2 points higher and had to go 9 ticks. And you can see it went 9 ticks and then it's pulling back. And some of that is from bears who are selling 2 points above the 26 close. A low one short, but at the 60-minute moving average, and a pretty good bull bar, 27. Probably buyers not far below 28, probably buyers around the close of 26. You have the scale in bears who sold the 26 close and sold more 2 points higher. We're right now at their average entry price, so some of those bears are buying back their shorts right here, disappointed by the size of the reversal at the 60-minute moving average. The bears are hoping this is simply a sell vacuum test of support and that we get the low of the day from here. But I would not buy the 28 low. I did sell up here because this is a fairly high probability sell. You know, you get the 26 sell the close sell. And a lot of bears will sell 1 point, usually 2 points above the 26 close, and it usually tests down near the 26 close. And it's a scalp for me, not a swing trade. For the bears, it's a low 2 short, but 3 dojis. I think better to wait. And for the bulls, they're hoping it's a bad bear flag and that there are buyers below. But I would wait for either a strong reversal up or better, a strong reversal up followed by a test down. Then you'd have a chance at a major reversal. Probably a trending trading range day, upper range breakout, and then lower range. Bears creating a better low 2, but at support, 60-minute moving average, and not at resistance, the 5-minute moving average. Limit order bulls so far, who bought the 1 low and 1 or 2 points lower, are trapped. Now, what kind of day is today going to be? You have a strong bear breakout. Is it the start of a bear trend day? It might be. Or is it more likely going to simply be a bear breakout that leads to a trending trading range day, which I think is more likely. Remember on the open, I said that last week was a big outside week. This week could be an inside week, which means that if we get near last week's high, we reverse down. And that's what this is. But it does not necessarily mean big bear trend. And we have a lot of bull bars through here closing on their highs. That reduces the chances of a bear trend. Even with all of these bear bars, it still makes it more likely that this sell-off is going to lead to a lower trading range, and that we'll end up with a trending trading range day. Trading range breakout, brief, just a couple bars, and then a lower range. This is more like today. We have a wedge, a sell-off reasonably strong, a reversal up, but it still only resulted in a lower trading range. So this is the kind of thing I'm talking about today. A trading range that developed yesterday and a very strong sell-off. First reversal up minor, and then the next sell-off, the bears have a chance of a major trend reversal, and they got one, a higher low major trend reversal. It still stayed sideways for most of the day. Finally got back above the bottom of the upper range later in the day. Similar to today, very strong sell-off, but the day ended up going sideways rather than down. Another strong sell-off, first reversal up minor, not really enough bars for a higher low major trend reversal, but The bulls did get a major reversal up all the way above the high of the day. While this is possible, it's not likely. More likely, the bulls will have to do this before they can get much of a reversal up. Of all the days, today's probably most similar to this or this. And in both cases, trading range for a lot of hours. You can see this one we had a second leg down, not much, and then we started to go sideways. Here, we did not go below the low of the sell climax. Today, the bears would like to get below the 27 low, and they'd like it to be a strong bear trend, but right now, it's more likely to end up as a trending trading range today. So not a lot of bears willing to sell down here. Remember, you have sell the closed bears 26 who are disappointed by 27, especially at the 60-minute moving average. And a lot of those bears are trying to buy back their shorts at the 26 close to avoid a loss. So it's always interesting to see what happens if it gets down to that low close. Does it collapse below it? If so, it increases the chances that we'll get a lot lower prices. On the other hand, if it stalls, it increases the chances that the bears are unwilling to sell low and they're eager to buy back their shorts low, and that means we'll probably go sideways. The bears who sold 26, it looks like a lot of them sold more 2 points higher and scalped out. So they're not short anymore. And the ones who did not scalp out are still, it looks like they're probably pretty eager for it to get down to the 26 close. It's taking a lot of bars and they're starting to get nervous. At some point, they conclude it ain't going to get there, and they buy back their shorts, and you can get a higher low. I had one example of that. I don't know if I can find it again. Here. Okay, sell the closed bears, disappointed by the bull bars, and they sell more higher, and they try to get out, break even at the low close. It does not get there, and they panic out and buy aggressively. And the bulls see that happening, and they buy aggressively as well. So I'm not showing examples of a spike in channel bear trend. So big bear breakout, a spike, a pullback, and then a channel. The bears have to prove to me that they can break below the low of the day and get follow through. Without that, the odds are this is the early stages of a lower trading range. This is important. Are we going to reverse up around the 26 close, or are we going to get a big bear bar closing far below 26? But the bears still need follow through even if they do get that big bear bar, because the trading range attempt may go a little bit lower like this. So this is the next thing that would I buy or sell the 27 low? I did nothing, but if I were doing anything, I would buy betting against the strong bear trend and betting in favor of a trading range day. You can see I did not remove this line, measured move from the high of the day to the open of the day, because I thought today had an increased chance of being an inside day and part of an inside week. And if we reversed, we were far enough above the open to make a big bear trend day unlikely, and therefore more likely the sell-off would be a bear leg in what would become a trading range day. And if the open is in the middle of what is a trading range day, the market usually tries to get back to the open at some point after 11 o'clock or so. So this is a magnet. The market's deciding, is this the start of a big bear trend or simply a sell vacuum test of support, 60-minute moving average? It's more likely a sell vacuum test of support. but we need more information before the probability becomes high enough for everyone to believe it. The bears are still hoping it's the start of a big bear trend day. The next couple bars are important. The bears need to convince traders that this is the start of a big bear trend day. And if they fail to get pretty good selling over the next couple of bars, traders will conclude that a trending trading range day is more likely. Still always in short. I did not buy and I did not sell. We're at the measured move target. Are we going to fall 3-4 ticks below it, increasing the chances that it's going to be a stronger type of bear trend day? Or are we going to reverse up, increasing the chances that it will be a trading range day? We're already several ticks below, and that makes me believe that the market is ignoring the measured move projection. So I'll get rid of it. If the market is ignoring it, I'm going to ignore it. Let me check a measured move from the high to the low. Gap 34 close, 33 low. Bulls hoping now a wedge bull flag. 3 reversals up, 1, 27, and they're hoping for a reversal up here. But I think this is a surprise, a relatively lower probability. It's not a big surprise, but it's a little bit of a surprise. I thought it was more likely that we would get buyers at the 27 low. Yesterday's low is just a little bit lower. Bulls hoping a wedge low of the day, wedge bull flag. This is interesting, right? It's a reasonable swing buy, but bulls who take the buy have to decide where to put their stop. Do they put it below 35, or do they use a wider stop, like 3 or 4 points below 34, and then scale in lower? For the bears, can they sell the 35 high? I would not. A lot of times when you get a wedge top, you get a wedge bottom, so we might get 1, 2 slightly lower low. Limit order bulls who bought 1 point below 26 made money. Probably this is going to be what I said, a trading range day, similar to this one where the bears got 1 more push down. Can this end up being a big bull trend day? While it's possible, I think more likely it'll be a trading range day. Open of the day is a magnet. Whenever it's clear, it's not going to be a big bear trend day, and the open of the day is in the middle third. It's a magnet, and we probably will get there or close to there at some point today. The market right now is deciding, is this a wedge bottom and the start of a bull trend, or is this the end of the bear trend and the start of a trading range? I think it's more likely the start of a trading range. 6 ticks above 35, and we're pausing. It's also the 60-minute moving average, but it's showing that bulls are at least taking at least partial profits, and that means there's not a lot of conviction that this is going to be a big bull trend. Is it always in long yet? Probably. We have the context is good. The bears needed good follow through. The bulls have a decent bull bar 35. When I say always in long, I simply mean that we're probably going at least a little higher, and that there are buyers below. Sometimes it does not take much to convert a day from always in short to always in long, especially if it's a trading range day, which I think this probably is. The bears are hoping this is a lower high and that we're channeling down, making a series of lower highs like we did in that huge bear day last week. Just kept making lower highs after strong bull bars. But this did not have the early buying that we had today. And it's had a series of sell climaxes. The bears kept coming back. I think the bears here got exhausted and that this whole thing is a bull flag after this rally. But strong enough down, probably will go sideways. Buyers below 37. Where do the sellers come in? Well, we're kind of in the sell zone. 60-minute moving average, 5-minute moving average, 31 high. Also, even though it's a wedge bottom, I think most traders believe a trading range is more likely than a bear trend, and therefore bears will be willing to sell up here around the 2 moving averages, betting that this is probably a bull leg in a trading range, and therefore probably will have a hard time going much higher. The bulls are trying to get above the low of 1, but I think the real key price at the end of the day is the open of the day. For the bears, a double top bear flag, neckline, measured move down. While it's possible, it's not likely. In general, double top bear flags have about a 40% chance of success. Gap down, sell off, double top bear flag, another one. They usually have a very strong leg up, and it looks like the bulls are going to get the reversal, but we then sell off with a series of bear bars, break below the neckline, and fall for a measured move down. Similar to today, second leg down and a reversal up. The bears want the double top. Instead, we got a higher low major trend reversal. So I think this is more likely. So right now, I think, I would say at least 50% chance we've seen the low of the day. We know 90% chance we've seen the high of the day. After the breakout of the 18 bar range, here's bar 18, we broke below the bottom. 90% chance, only 1 chance in 10, we're going to get back above that bar. If we start to reverse up strongly, then instead of 90%, it might be 80%, 70%, 60%, but right now it's 90%. Bears want the double top, but more likely we'll get a higher low. So double top bear flag, but 2 sell climaxes like this, and we're at the 60-minute moving average. We're a little bit below, but break the 60-minute moving average, you can fall 5 points below it and it's still support. You can see we're about 5 points below it. We're 5 points above it here, and it was resistance here, about 5 points below, and it's still support. 2 big bear bars, unlikely to go straight up. So probably sideways here or soon. Double top bear flags, hoping, here similar to today, 2 legs down, 1 pull by 2, still is a double top. Fell for a bottom measured move, and then buyers below. And I think there'll be buyers below today as well. Similar to today, a second leg down after a strong sell-off. Bears got a double top, we got a higher low. And then the breakout above the higher low failed, and then we got a second leg down afterwards. But the double top failed. Similar to today, sell climax, second leg down. attempted a double top, we got a higher low. So I think this is the kind of thing we'll get today. I doubt we'll go straight up. We might. I think more likely it's going to be a trending trading range today, and that this will stay sideways for maybe until 11 o'clock, so another hour or more. %50 pullbacks are common, and pullbacks to the top of the buy signal bar are common as well, so we might pull back a little bit more. Right below the moving average. Might be sellers here, right? I think that this is near the top of a lower trading range rather than the start of a bull trend. We got the reversal down and up, and then two dojis at both moving averages, and right below the top of a possible trending lower trading range and a trending trading range day. So probably not a lot of buyers 39 high. I don't think we're going to get this. We might, but here we got 4 bull bars closing on their highs. Do not have that kind of strength today. Let me make this bigger. Bulls are hoping for a breakout, but more likely sellers somewhere around where we are. The bulls want this. Probably not going to get it. Four consecutive bull bars. Here, bull bar doji, bull bar doji weakens the chances for the bulls. Makes it more likely we're going to test down. Low 2 at the moving average, but 3 dojis and probably always in long. So probably buyers below 40, probably buyers below everything, buyers below 35 if we get there. And I think the probability of that is high enough so that we will not get there. Whenever something is pretty obvious, it usually does not happen. And that's why I think we're always in long. So I think, while we may go sideways for a couple of hours, I think we'll probably form a higher low. And if we do get below 34, probably buyers below. traders want to buy, but not up here. They want to buy down here, or they want to buy after a strong breakout. And bears want to sell, but they want to be confident that the bulls will stop buying and only buy lower. And that's not the case yet. Right now, the bulls still have a slightly higher probability of a bull breakout. But the more bars that get added to this tight trading range, the more it becomes 50-50 that we're going to come down here before we try to go up there. But always in long, probably we have seen the low of the day. Maybe 60% chance we've seen the low of the day, 90% chance we've seen the high of the day. 60% chance, whenever you have a trending trading range day, upper range, breakout, lower range, 60% chance you're going to get back above the low of the upper range. I think that's higher today. I think it's a higher probability bet today. We had so many bull bars here, and we're holding around the 60-minute moving average here. So I think it's more like a 70% chance we're going to get above the low of the day at some point today. And get above the low of bar 1 at some point today. Whenever you get a reversal and then a bull flag, the odds are you're going to go higher. Sometimes you get the reversal bull flag and it goes down, but most of the, 60% of the time you're going higher without first going down. I say that, but I think it's probably closer to 50-50 that we get the pullback. What I would like, which we're not going to get, is the reversal to go above the sell climax and then go sideways, number one. And number two, I don't want the bull flag to have 4 dojis in it. And both of those things, I think, increase the chances that we'll get a pullback rather than just a reversal. I still think a trading range day, a lower trading range is more likely. So, this is the sell zone, not a great sell, fairly tight channel up from 34, but not a lot of traders willing to buy at the high, and that increases the chances that we'll have to get a higher low, a pullback. When you have a trading range day, a lot of times the initial leg up or down lasts about an hour, and then the subsequent legs last 2 or 3 hours. And you can see we fell for about 20 bars, hour and a half, and the bulls would try to rally for at least an hour and a half or 2 hours, maybe 3 hours, but we could sell off for 5 or 10 bars and get a higher low, and that would all be part of the same rally. This is a small cup and handle type of pattern. Whenever you have a reversal, that's the cup, and then the bull flag afterwards is the handle. That was a pretty popular pattern in the 80s and 90s. Investors Business Daily, one of their head guys, coined the term. It's not like he discovered something that nobody ever knew. Every pattern everybody knows, and it has known for hundreds of years, but every now and then someone puts a new label on it. And, I come up with labels as well, but I want mine to make sense. And so I don't like to use cute terms like cups and handles and rhinoceros tops and things like that. Anyway, this is a cup and handle. You got a reversal and then a bull flag. The pullback from the reversal is considered the cut and the handle from the cup, like a teacup. Same thing here, cup, and then the pullback from the reversal is the handle. Opposite is true with tops. So reversal, and then the pullback is the handle. So cup upside, so it's an upside down cup and then a handle. forcing traders to buy high. You see how the pullbacks are so small. The bulls know there are buyers below. They don't know if it'll go down very much before it goes up a lot higher. So bulls buy a little bit just in case it keeps going up. They want to make sure they have part of the position. If instead it goes down, they buy more lower. That's how you get small pullback bull trends. Traders know it's going higher. They just don't know if it's going to go lower first. And because they don't want to miss a big trend, they buy small. And as it goes higher, traders who are long buy more. Traders who are flat finally give up and start to buy. And most of the traders use a wide stop and buy more lower, betting that the odds are against a bear trend. A lot of times when you get this after 5 or 6 or 7 bars, you suddenly get a breakout like yesterday. So small pullback bull trend, and then suddenly traders stop waiting for pullbacks, and the bears give up, and the bulls buy at the market, betting that we'll get at least some kind of a measured move up based upon the breakout. You can see we're getting close to the bottom of bar 1. Is it still a 90% chance we will not get above the high of the day? No, the higher up we go, the probability drops. But right now it's still probably 70 or 80% that we're not going above the high of the day. You can see some of the bears might have stops at the 1 low, betting on a gap. But I think that's a dumb thing to do. The odds were that we were going back above the 1 low. Where do the bears come in? Well, right now it's a small pullback bull trend. The bulls are trying to get the reversal. So the bulls are hoping that we have an upper range, a lower range, and we just trend up for the rest of the day. Sell climax, and just trend up. Do I think we're going to get the pullback? Yes, I think we'll get a pullback instead of trending up all day. But, more bars, as more bars get added to this, it becomes less likely that this will be a lower range and more likely that this is a wedge bull flag and we've begun a reversal. Even if we do get the reversal, the odds are against a new high of the day. And if we do get a new high, the odds are against it going much above the old high. Because most reversal days end up as trading range days. So big reversal, never got back above the high. Reversal, so cup and handle, cup, and then the bull flag is a handle. This was a small sell-off, higher chance of a bull trend day. Same thing here. Well, this is kind of similar to today, although the reversal up here is much stronger. So cup, and then the bull flag after the reversal is the handle. I do not think we'll get that. This is more like today where you have a deeper pullback. It makes it harder to get the new high, although here we accelerated it up and got the new high, closed back below that high. Hard for, if there's a big sell-off initially, it's hard to get much above the high of the day, and it's hard to close far above the high of the day. Here it's rallied for 70 bars, could not get above the high. Here, same thing, could not get above the high. Here, rallied, could not get above the high. A little bit above the high at the end of the day, but not much. Could not get above the high. Could not get above the high. A little bit similar to today, climaxes and a reversal, and here formed a trading range. Could not get above the high. These are the 2 days where it went far above the high and became a big bull trend day, and both had one thing in common. The sell-off was not all that big, especially here, just a little bit of a sell-off, and therefore the reversal could lead to a big bull trend day. Can you start to scale into shorts? It's probably not that good an idea. Maybe you could sell at the 31 high and put a stop up here and scale in higher. But when the pullbacks are small, it's hard to make money because it doesn't fall far enough down to make a profit. Usually has to go sideways. And at that point, you have a better chance of a deeper pullback. We know that this is around a 50% pullback because we fell from a measured move down from the high to the low. But still, unless bears are willing to use a wide stop and scale in, I think it's not worth selling. And the bulls, not much risk if they can put a wide stop down here. Spike pullback channel might come back down here. But the downside risk right now is not very big. Small pullback bull, usually the first reversal is minor. Even if it's deep, it'll be minor, which means we'll come back up here. Sell zone, low of bar 1, open of the day, 50% pullback, but tight channel, so more likely a minor reversal. As I said, we might get down here, a 50% pullback of the rally, spike pullback channel, but minor reversal, first reversal down, probably minor. We may end up spending the remainder of the day within a couple points of the open, a point or two above, a point or two below, and then mostly sideways. The buy zone, 50% pullback, maybe around this pullback from this rally. For the bears, not a very good sell the market bar. You can argue spike and channel top, failed breakout above a double top. All is true, but a small pullback bull trend, usually very difficult to make money selling with the stop. Surprise bar, so probably a couple legs sideways to down. But as for the double top here, more likely a minor reversal and buyers somewhere around here. Still always in long. 50 was a small surprise bar. Open of the day, I think, is a more important magnet. Bears next, we'll try to get a wedge. We have a wedge bottom, we have a wedge top, and probably we'll go a little bit higher, and the bears will try to get another wedge. Still always in long, still probably more buyers than sellers. Whenever you have a spike pullback channel, the market often goes sideways about halfway down. We're a little bit more than halfway down. The bull's trying to hold above the 60-minute moving average, but unlikely to go very far up or down. Probably we're going to end up closing somewhere in the middle of the day, and maybe a point or two above the open. We're right now a couple points below the open, but I think that'll probably be the magnet for the remainder of the day. I don't want too many lines. I think the open is more important than the low of bar 1, so let me do it this way. Testing the bottom of the channel, so spike pullback channel. Bears are hoping to get a second leg down from this sell off, and then a double top bear flag, and then a resumption of the bear trend. But more likely we'll get a higher low somewhere around a 50% pullback. Bears want a double top bear flag. Bulls want the double top to fail, form a higher low major trend reversal, and lead to a bull trend. And double top, bulls tried to get the higher low, collapsed. I still think more likely this will be a higher low over the next few bars. Is it always in short yet? No. I think the bears need a strong bear close here. However, I still think that either we've seen the low of the day or the bulls will buy this pullback. So let's see how this bar closes. If it closes around its open, that would increase the chances that we've seen the low of the day. If it closes on its low, it increases the chances that we're going down to a new low. But even if we do, I think bulls will buy the new low. Right now we're in the buy zone around the middle of the bull leg. Big enough surprise, probably at least a small second leg down like this. Strong sell-off. First reversal up, usually minor. So first reversal up, probably minor, unless the bulls get a good bull close on the bar, which right now does not look likely. You can see the hesitation. The bears want resumption of that earlier sell-off, and they're just not getting good follow-through. Close at the 53 low, good for the bulls, but a bear body, good for the bears. So probably always in short, but trading range days, by the time you conclude their short, they're going to reverse up, and by the time you conclude their long, they're going to reverse down. So, in trading range days, I tend to think the opposite. When I see big sell-offs, I think we're probably going to soon go up. And if I see strong rallies, I think we're probably soon going to go down. For the bulls, they probably want at least a micro double bottom here. So not a lot of buying yet. Some bulls bought the 39 low trading range day. They sell above things, 31. They buy below things, 39. You have buy the close bulls 47, disappointed 49. Some of them tried to get out break even 50, 51, 52, and then they gave up on 53. And that's a good part of the selling that took place on 53. Buy the close bulls 47, disappointed, could not get out break even, and then they gave up. Still a higher low, more likely than a bear trend. At a minimum, you got sell the close bears 34, selling more below a bear bar 49. Their average entry price, the first sell is here, their second sell is here, and here's their average entry price, and you can see what happened. We got a bounce. That says that some of the sell the close bears here, very disappointed by this, decided that instead of trying to make a profit, they would just try to get out without a loss. They sell that close, they sell more below a bear bar here, and then this is the average price, and they buy back their shorts here, and that's part of the reason for this. Part of it is also spike pullback trend, and the bears who shorted here get out here, and the bulls tend to buy there as well, betting on a trading range instead of the bear trend. Always in short, but I think not a very good short because a trading range is more likely than a bear trend. Limit order bulls 39, need one more tick. And then it's possible, I think we'll probably go back up here. I think we'll end up closing the day around the open. This is a big enough surprise so that the bulls might need a double bottom here. But I still think we've seen the low of the day, and it's back to 90% chance that we've seen the high of the day. Right now, maybe 60% chance we've seen the low. 60-minute chart, pair of decent bear bars. and it makes it less likely that we go straight up. For the bulls, remember I said that 54 probably always in short, but when the market's on a trading range day, by the time you think it's always in short, it's probably going to reverse. You can see they bought the 39 low. I bought the 39 low. I scalped. Bulls are hoping for higher low major trend reversal. Head and shoulders bottom, left shoulder, head, right shoulder. But some of the bulls will sell around the 47 close because they're bothered by the size of the sell-off, and they might conclude that a trading range is more likely than a bull trend. Near the top of the range, but a strong enough reversal that so that we'll probably get at least a small second leg up, which means probably buyers below. Range here is pretty tight. Right now we have a higher low major trend reversal. Not a great buy signal bar, 56, but it follows only one bull bar in the past 8 bars. So I still think a lower trading range, but I also think we're going to end the day around the open of the day. I am currently flat, and I'm looking to buy lower and maybe sell higher if I believe that if I believe the bulls are going to fail, I might sell. But right now, I think 60% chance we're going to the open of the day. We have 2 hours left. We may go a little bit lower first, but I think that's where the market is headed. So I'm not eager to sell down here when I think it's going up here. For the bulls, they have a double bottom bull flag. The bears have a double top bear flag. Bulls have a double bottom bull flag and a reversal up. But with the bear bar 58, a lot of bulls are not going to buy with a limit order below the bear bar. So right now, a lot of traders are waiting for it to get lower to buy or higher to sell. For the bears, potential second entry short with 58 for a lower high, but I still think it's more likely to go up near the open of the day by the end of the day. Sometimes when you get a reversal up from a sell-off, if the sell-off is in a relatively tight channel, like this one is, the market cannot go up unless it first forms a double bottom. And that might be what's going on here. The bulls might need a double bottom. Small double bottom on the reversal up. Reversal up, bulls needed a double bottom, even though it took place over the course of 2.5 hours. They eventually got the double bottom there, double bottom here, double bottom here. Strong enough sell-off, unlikely to go straight up. It pulled back. I know it's a higher low, but it's still a type of double bottom. Same thing, double bottom and then a rally, double bottom here, and then another double bottom here. You can call it a triangle or a triple bottom, but the bulls needed to test down before traders bought. Double bottom and then a rally, double bottom, then at least a brief rally. Now I think 56, 57 make it back to always in long, and I think the open of the day is an important magnet. For the bears, they have a second entry short for this lower high, but I think more likely buyers below. Not a lot of bulls are going to buy right here because 60 is a second entry short. It's a bear bar closing on its high, and it's in the middle of the lower trading range. We'll also pull back from the higher low major trend reversal, always in long, but a little tricky because you're buying at the top of a 3-hour trading range and above a pretty big bull bar. Not high enough probability for a scalp. And for a swing, it's not great either because, as I said, I think we'll get to the open. I think we'll get at least one tick above it. I do not think we'll get 3 points above it. So not a great trade. I'm not sure the probability is high enough for a scalp, and for a swing, I'm not sure that the reward is big enough. If you're doing anything, we're already always in long, but it's really not the kind of buy traders want. Traders have been doing a lot of limit order trading in here, and now the market is giving them a stop order setup, and a lot of traders don't want to take it. Having the bear bar creates a micro double bottom, and that makes it a slightly higher probability buy. There's still a lot of time left. We could pull back a little bit more before we get to the open of the day, and you're buying at the top of a tight trading range, at the top of a trading range, but we're always in long, and we should go higher. So I'm not opposed to taking the buy, but the math is not nearly as good as anyone wants. I debated taking the buy, and I ended up not taking it. I want to say something on an entirely unrelated topic, and everyone is aware of the Equifax data theft, and therefore all of us, at least all of us in the United States, have a whole bunch of financial information, including bank accounts and social security numbers, out there on the internet, and they're probably being sold to thieves all around the world. And I spent a little time trying to think about the best way to protect myself, and I ended up contacting each of the 3 credit bureaus, Equifax, TransUnion, and Experian, and I put a freeze on my accounts, all 3 accounts. And what that means is nobody can do a credit check on me without me first unlocking the freeze. And I have an elaborate password that I have to use to unlock the freeze. So if I want to get a loan, which I can't imagine I'll ever do, but if I were to get a loan, I would have to ask the bank, which of the 3 credit bureaus they want to check, and then I would either online or via the phone unlock the credit checking, have the bank do their credit check, and then I can put the lock back on. My thought was that if anyone were to try to take documents out in my name and then borrow money using those documents, and then I end up being stuck with paying the loan back, or stuck with the work of trying to convince the lender that it was identity theft and not me. Now, I don't worry much about it at all, because no one's going to loan money without first doing a credit check on the borrower, and supposedly they cannot do a credit check on me without me first unlocking my account briefly while they do the check. strong rally, trading range, trend resumption up. Sell-off, not all that strong, trading range, the bears want trend reversal down, trend resumption down, and the bulls want trend reversal up. This is one of those examples of something that some computers might see as a wedge, even though it does not look like a wedge. Here we go. 1, 2, 3. If everyone believes that a move above 48 would fail and create a wedge top, a lot of traders start to sell before it gets above the 48 high. And sometimes you get a reversal down. And I think of it as a wedge. I know, most people just think of it as a lower high, but I think the forces behind it are the same as those for a wedge, except that the bulls simply were not strong enough to get the push a little bit above that high. Would I sell here? No, I still think we're always in long, and I still think we're going to try to close at the open of the day. However, if we start to fall another couple of points below where we are now, the odds will favor a sell the close finish and a close near the low of the day. Daily chart, so far an inside day. Weekly chart, so far an inside week. There's an increased chance of this week being an inside week simply because last week was a big week and we're in the middle third of last week, and when that happens, you have an increased chance of having an inside week. I did not buy above 61 because I was not sure the math worked out, and I have not yet shorted this. So right now I'm going to wait for a bar or two to see what we get. The bears want trend resumption down. Leg 1 and then a wedge pullback and then leg 2. Again, does not look like a wedge, but I think this does not look like the end of leg 1, but it probably is. And this is probably part of the pullback. So pullback A, B, C, D, E. That's what I assume. I assume that the first leg down ended here and that this new lower low is part of the pullback. And so the second leg down is beginning here. Unless we start to get 2 big bear bars or 3 or 4 smaller bear bars, I still think the odds are we'll try to get back to the open by the end of the day. This is too early, I think, for a sell the close finish. It can happen, especially when you have a strong bear trend day. This is not a strong bear trend day, but if you have a strong bear trend day, a lot of times you'll get sell the close that starts at 11:30, 12 o'clock. So it's possible to get sell the close starting before 12:30, but when there's a lot of trading range price action, if sell the close starts before 12:30, it usually fails, and it fails to continue to the end of the day. And a lot of times it reverses. Sometimes, let me get the sell the close. On a strong bear trend day, you can get a sell the close finish that lasts an hour or more. So, this is about 5 or 6 bars. This started at around the same time today, 12 o'clock, trend resumption down. So this is similar to today, but you can see it's tough to sell when you start to get dojis and bull bars. Same kind of thing. Here started at 11:20, but a bull bar, another bull bar. Of these, is I think probably most similar to this. Sell-off, tried to rally pretty strongly, and trend resumption, but difficult to sell. Here 4 out of 5 bars are doji bars. That I think is a pretty difficult sell. Bulls want the double bottom, higher low, major trend reversal. Double bottom, higher low, major trend reversal. Small double bottom here, double bottom here. Double bottom, higher low, major trend reversal. Double bottom, slightly higher low, here's the low. Double bottom, sold off with a lot of bear bars, but still became a double bottom. Can you buy right here, 54 low, betting that the bear breakout will fail? We're in the final hour. While it's still a trading range and therefore more likely buyers at the 54 low and below, I'm usually more interested in taking stop orders in the final hour, because sometimes what happens is you buy more lower and it just keeps going down for the remainder of the day, and you end up with a growing loss, which I don't want. So if we get a stop order buy, then we have a big high 2, leg 1, pull back, leg 2. And for the bears, hoping for a sell to close finish. I think it's a really tough sell. We have a pretty good reversal up here. We had a lot of good bull bars early. It's more likely that we've seen the low of the day. I still think 60% chance we will not fall below the low of the day. Still sell to close, but I'm trapped out. I'm not doing anything right here. I still think it's slightly more likely that this is going to remain above the low of the day. We're getting a lot of bear bars, so I'm hesitant to buy, and we're still above the low of the day, and this still is at the bottom of this trading range, so it's possibly a wedge bull flag, and therefore I'm hesitant to sell. Go to that sell to close from last week over here, but this was much more bearish, and obviously it was much earlier in the day. It's, I think, similar to this, just not looking all that strong. The context here is better for the bears than today. I think the bears get out above a bull bar, 72 maybe, and especially if it has more than a one tick body. But you got 6 bear bars in this tight channel, so even though it's a wedge bull flag and a higher low major trend reversal, a lot of bulls will not take that buy. Tough buy, tough to buy a 54 with a limit order this late. Tough to buy a 2-bar reversal, 71 and 72 after 3 bear bars, and 6 bars out of the past 7 being bear bars. I think the Oizen bears get out 3 or 4 ticks above a bear bar, 71, or 1 tick above a bull bar, 72. But I think not a great buy, and I think the bears get out above 72. We still might get back to the open of the day, but 8 bars in a tight channel like this make it more likely that we'll go sideways here. I think difficult to trade. I think you have to get out of shorts above 72, even though it only went 1 tick above 72. I think it's too late in the day to bet that this is going to continue for the remainder of the day, and therefore hard to short below 74. If it has a 2-tick bear body, the math is probably okay for a swing down, taking a chance that we get trend resumption down. This is not it, but this is the concern that, we keep the higher low, we go below that low, and we reverse up. So I think it's probably always in short. but the bulls want, remember over here I said it was a higher low major trend reversal, but a tight bear channel, and the bulls would probably need a double bottom, higher low major trend reversal. Well, they're getting a double bottom, higher low major trend reversal, but same problem, a tight bear channel with a lot of bear bars, and therefore a lot of bulls will not buy above 72. And I would not sell. We have too many bull bars here and too many good bull bars here. So for me, I'd get out of shorts above 72, and I think it's hard to buy. Let's say we get one more bar. Let's say 73 is a one tick. Let's say 74 is a one tick bull body. What do you do with 75? If 75 then goes above 74, then we'd have 3 bars pulling back. 72 going above, well, it'd be 2 bars. Well, it'd be 3. So if 72 goes above 71, and right now 74 above 73, if 75 goes above 74, that would make it more likely than not that we'll get a bounce and try to get up here or to the open of the day. 74 is probably not enough. The bulls probably need one more bar after 74. So I'm stuck. I can't do anything. I don't want to sell because I think the odds are against it going down very far. And we're going to run out of time before the bulls are confident that we're going to try to get up to the open. This is too late in the day, for the bulls to get a credible micro double bottom here. I'm still slightly more bullish than bearish, especially if 75 goes above 74. You can see bears giving up, and this is good for the bulls. I think the odds are we're not going to reverse back down, but will it break free of the 60-minute moving average and get to the open of the day? I don't know. So, it's not a strong buy. Becoming buy the close. This is an example of one of those sell the close trends starting too soon and reverses into a buy the close trend. By the time you decide it's going up, if you're not already long from lower, it's usually too late to buy. Usually buy the close, sell the close lasts about 5 or 6 bars, and this is just about 6 bars now. Also, as I've been saying all day, the target is the open of the day, and that the market would probably try to close within a point of the open of the day, which is right around where we are. Pretty funny day. Lots of interesting things. I think fairly easy to trade, fairly predictable. The weekly chart last week was an outside week and a doji week. A doji week is a 1-bar trading range on the weekly chart. That increases the chances of a continued trading range this week. Last week was also an outside week. That increases the chances of an inside week this week. So coming into today, you have to be thinking that today may test near last week's high and reverse down, and today might have a lot of trading range price action. We had bull trend last week, trading range, trend resumption up. Bulls were hoping for bull trend, trading range, more trend resumption up into a broad bull channel, and instead we simply got 2 legs up and then a reversal down. Here we tried to get a wedge bottom, and we did, and we got a trading range, and the bulls wanted a major trend reversal from the wedge. They tried to get one here, fairly tight channel. The market usually needs a double bottom when that's the case, and they got a double bottom here, but also a tight channel. It lowers the probability of much of a rally. It's also a wedge higher low, so higher low major trend reversal, double bottom higher low, and it's also a wedge higher low major trend reversal. And the bulls got a little bit of a reversal up into the end of the day. On the open, we had a small gap down. We had a lot of pretty good bull bars, and that made a big bear trend day unlikely. So if we were going to get a bear trend day, it probably would be a weak bear trend day, and the most common type of weak bear trend day is a trending trading range day, where you have a trading range, a brief breakout, 3, 4, 5 bars, and then another trading range. And this is a wedge. You can call this whole thing a trading range, but to me, I view this as an attempt at a wedge, an attempt at a trading range, an attempt at a bull trend. And we got a bear breakout lasting about 5 bars. We got a small second leg down, but most of the remainder of the day was in a trading range. So to me, it's a type of trending trading range day. Trading range here, basically in attempt through bar 21, it was a trading range. Then we got a 5-bar breakout. It's also a spike and channel day, spike, pullback, and this still might be a pullback from this. And the bears will try to get a second leg down tomorrow. So bear trend, and then a trading range. You can call it a wedge, 1, 2, 3, and the bears will try to get trend resumption down tomorrow. So leg 1, pullback, leg 2, and the bulls are hoping for the major trend reversal to lead to a new all-time high. As you know, I've been talking endlessly for months about how unusual the price action is in terms of the number of bars in the bull trend without a significant pullback. The daily chart now has about 250 bars without a 3% correction, and it has never done that probably in the history of the stock market, certainly not in the past 90 years. So that is extreme. The weekly chart now has 50 weeks without touching the weekly moving average, although a couple of months ago it got close, did not touch. That is unusual and therefore extreme. And the monthly chart right now is 12 months without touching the moving average. So as soon as November starts on Wednesday, that'll be the 13th month without touching the moving average. And that's only happened once in the past 50 years. So we have really unusual, extreme behavior on the daily, weekly, and monthly charts. And while it can continue forever, the market never has to have a pullback. Theoretically, that's not how markets behave. Stuff happens that results in at least small pullbacks, and the stock market will have a 50% correction sometime in the next 10 years. I know it sounds crazy now, but every 10 or 20 years, the stock market has a crazy correction, 30%, 50%, and that has always been the case. And it's always going to continue, even though everyone says that traders today are smarter than traders yesterday, and that's nonsense, right? So in other words, we, the institutions, we, the American economy, we, the American government, are so much smarter than before, and we have all these other things in our favor. Our technology and software is so much better, so that it's impossible to get 50% corrections, and it's nonsense to talk about them. And but that I can just say that you are going to see things over the next 10 or 20 years that you just don't think are possible, but they'll happen. And an obvious one is to be talking about a crazy big correction when the market has been going in a very strong bull trend now for 8 years. The market will have a 50% correction at some point, and there won't be an obvious reason for it. It'll just happen. Here's the monthly chart of the cash index, and these corrections are bigger than 50%, and there are other big corrections here you can't see because I got the numbers on the chart, but there will be some huge corrections. But right now, it's usually, I've been saying for months that the odds favor a correction, but over the short term, you have to bet every reversal is going to fail, because that's what typically happens. Markets have inertia, and every time you see a top, and there have been lots and lots of tops in the mini, and at each one, I said that unless you get a strong breakout with follow through, it's more likely that the reversal is going to fail and the trend will continue. And that's still the case here. Unless we get a strong breakout with follow through, chances are every reversal attempt is going to fail and the market's going to continue higher. However, one of the unfortunate things for traders trying to sell is that by the time you get a big bear breakout and then a follow through bar, whatever correction you're going to get, it's already half over. And that's pretty much always the case. You can get really big corrections, but a lot of times they happen so fast. By the time you decide that a correction's underway, so for example here, at this point, do you think it's a bear trend? Do you think we're going a lot lower? Well, what about now? What about now? Okay, maybe we're going lower. Okay, so we go lower for another week, and that's the end of it, right? And the same is true back here. Okay, markets never give you a lot of time to sell the top. That's nonsense. I think Guy Adami is a pretty smart guy, but he keeps saying that one thing over and over again, but it's the dumbest thing he says. Markets never give you a lot of time to sell the top. You got a whole bunch of time to sell. Okay, every reversal attempt fails. They keep buying every reversal, and by the time you get a strong bear breakout with follow through, and now you think the market's going lower, you're probably already halfway through the correction. And here, that's what happened. So by the time you decide it's going down, it's already halfway to the bottom, and by the time it gets to the bottom, it's going to reverse up quickly. And that's why I'm holding puts and put spreads, because all of this happens so fast. By the time you sell this close, it just goes down one more day or two more days, and that's it. And stuff happens really quickly, and it's just easy to miss the whole thing. So when we get a correction, it's probably going to be like that, or it might last, a couple of weeks like this, but that's it. The odds are the bull trends on the daily, weekly, and monthly charts are so strong, the channels are so tight that even if we get a big correction, a 20% correction, the bulls are going to buy it. The monthly chart, here's the monthly chart. When a chart looks like that, even if we come all the way down here, to 2000, a 20% correction, bulls are going to say, oh, it's just a breakout test of this trading range, and they'll buy it. Do I think we're coming back down here? Sure. I don't know that we're coming back down here in the next year or two, but I think within the next few years, we'll come back here and test the breakout point again. This is the monthly chart, and the similar thing is on the daily chart right here. I think we'll come back down and test the breakout point above here again. We tested it briefly here. I think this will happen sometime in the next few months. I think we'll come back down to the August high. And, it's about 100 points down or so. So about a 5% correction. Bears, they tried to get a top here, a buy climax and a wedge. The top failed. And now they're trying to get a bear IOI breakout above the wedge. That failed. And now we're trying again to get a top, a bear inside bar on the daily chart. Is this top going to fail as well? I don't know, right? You have to assume every top will fail, but because of the extreme nature of the buy climaxes on the daily, weekly, and monthly charts, you also have to assume that one of these corrections is going to work. Which one will it be? You don't know, right? And maybe the 10th one, the 15th one, but one of them is going to work. For stop entries today, one, we have a failed breakout below Friday's trading range, so a possible low of the day. It's also a 50% correction, and we're always in long in the close of one. And then buying with stops after that, not so easy, right? Buying above 4, no. Buying above 9, we're probably going up at least to the moving average, maybe yesterday's close, but maybe not a lot higher. 12 pulled back, one tick below 6, possible negative gap for a small pullback bull trend day. At that point, we have a lot of bull bars, but I also think that today's going to have a hard time getting above last week's high, and Friday's high is last week's high, so we might have a hard time getting above there. At this point, I thought, on the open, I thought we'd be in a trading range, either up here in yesterday's range, Friday's range, or down here above the 60-minute moving average. We ended up going below the 60-minute moving average, but we spent the whole day straddling the 60-minute moving average. Stop entry bulls, always in long. You've got a double bottom or a triangle here, down, up, down, up, down. Not a good buy signal bar, but we're probably going higher. And the same is true with 12. And when exactly 6 ticks above 12 and formed a wedge, possible opening, reversal, and high of the day. A lot of traders will wait for 3 consecutive bear bars, and they had it at 17, but they're all small bars. And then other traders waited for big bear bars like 22 and follow through 23, or 22 and 24. We know by the close of bar 18, there's a 90% chance either this will remain the high of the day or this will remain the low of the day. And since we're reversing down quickly, 22, 23, this is probably the high of the day, and we're probably going below the low of the day. But the 60-minute moving average is support, so we're probably not going much lower. Stop entry buy above 21. It's a high 219. I would not take it. The channel is too tight, and it's only a 1-tick bull body. And the wedge, we might get 2 small legs down. And then buying above 27, I think it's a minor reversal. I sold up there, even though it was a pretty good bull bar. I sold 2 points above the 26 close, betting that we would come back to the 26 close. And then I mentioned that, so stop entry, low 2 below 30, not great. Below bear bar 32, better, but probably not going much lower. And then stop entry above 35 for the possible low of the day. You can call it a double bottom. 27, a second failed breakout below the 60-minute moving average. You can call it a wedge bull flag. After Friday's run up, it's a higher low. It's also around a measured move down from the high to the low of bar 1. So all reasons to expect some kind of a reversal. We had a small pullback bull trend here. We have an inside bar 41. We're with these 3 dojis warning us that we're probably not going to go a lot higher. And then the bulls tried to get a small pullback bull trend here, like they did here, but it did not get very far. It got 1 tick above the low of 1 and reversed down. Trending trading range days, 60% chance you'll get at least 1 tick back above the bottom of the range, which is the 1 low, and that's what we did here, 1 tick above. Not a great short below 49, double top 30, but with this wedge bottom, chances are we're going to get 2 legs up, 1 pullback 2. That might be it, but not a great short below 50, 64 or 65. And then, so anyway, back to stop entries. Above 35, reasonable short, buy for the low of the day. And then above 39 or 42, or then where else? These are not stop entries. And then here, not a good stop entry, too many bear bars. And then I mentioned above 61, maybe, but I thought we might test down to the 54 low, so I ended up not taking it. For the bears, they have a double top, 58 and 64 or 65, but not a great short. I think we're still always in long. Maybe always in short, 67, maybe 69 or 70, but I still think it's more likely that we're going to try to get to the open of the day than it is that the sell to close finish will continue for the rest of the day. Buying above 72, 73, the bears definitely get out, and I thought bulls would buy a 3rd bar up, like a pullback bar 72, maybe a small bar 74, and then a big bar 75. Well, 74 was a small bar until the end, and then it broke to the upside. So at that point, the odds were we were going higher. follow through 75. Look what happened on 76. As soon as 75 closed, everyone hit buy the market, and 76 never traded below the 75 close. We got to within a tick of the open. The bulls had a perfect doji bar, and then we sold off at the end. And now we have basically a doji bar on the daily chart, but a pretty good tail. And traders are selling above bars. They sold above here, scaled in, they sold above here, and they sold above here. So I'm comfortable holding my puts and my put spreads, but as far as a stop entry short, selling below today's low, in other words, selling below 34, I don't know. It's a swing short, but not high enough probability for a scalp on the daily chart. So, if you're selling it, I think you're selling hoping that we come down to here, which is where I think we're going. I think that's the minimum target there, which is 2,500. And once we're there, we'll probably get here, 2,480. So if you're selling this, you're looking for a 100-point correction. For buy the close, sell the close. Two close, we're always in long, room to the moving average, so let's buy the close. And then up here, 13, 14, possible wedge, I would not buy the close. We got 3 bear bars, 17, not very big. And then 23 was the next time I think it was possibly sell the close. We had that outside down 22, and then a bear followed through 23. So 23, 24, sell the close. 25, it's only a few ticks above the 60-minute moving average, so I usually do not take that sell. And then down here, I'm not selling closes. If anything, I'm looking to buy a reversal up run from the 34 close. Probably always in long 37, so traders could buy closes. And then this is tricky, all right? It's a small pullback bull trend, but there should be sellers around the low of 1 and the open of the day. And I don't want to be buying within 5 ticks of a magnet, because if I buy 5 ticks below a magnet, it has to go up 5 ticks for me to make 4 ticks, and there's room to make a profit. But if I buy 4 or 3 ticks below the magnet, it's too easy to get trapped because too much risk that the market will turn down at the magnet or a tick or two below. And then this is just all opposite trading. Instead of selling closes, you're looking to buy closes. Instead of buying closes, you're looking to sell closes. And same with here. 3 bear bars, 67. I said I thought we'd go a little bit lower, but I thought that it was starting too early for a sell to close finish, and that 34 would still probably remain the low of the day. Limit order trades, the 3 low is the first obvious one, and then maybe the 19 high, looking for a little bit lower, not all that great, and then 27. Normally I don't want to sell above a good bull bar like that, but since 26 was a reasonable sell to close, I was willing to take the short, but I did not sell with the limit order 27 high. I sold 2 points above 26, and a lot of other people did as well. It had to go up 9 ticks to fill the short, and it did. It went up exactly 9 ticks. And then here, probably buyers below 38. And then here, tough. I don't want to be buying too high up near the top of the range, and I don't want to be buying too close to the 1 low and the open of the day. And then probably buyers below things, right? Buyers below 39, buyers below 61, buyers below 55, and sellers above things, which turned out to be the case. They sold above 48. But how can you sell with 3 bars left in the day after you have 5 decent bull bars like that? So in theory, it's okay, but not really good in practice. Hi, Al. Do you think that if you plotted the interest rates on a monthly basis, that you would follow similar price action rules for major markets? Absolutely. Plotting interest rates is exactly the upside down of plotting T-bond futures and 10-year Treasury note futures, and they're very reliable. Let me give you an ETF example. Okay, here's the 30-year bond futures, right? And the ETF that mimics it is the TLT. Here's the TLT, Okay, it looks very similar. Now the TBT is the upside down version of that. Okay, and so it basically mimics interest rates, and I think that is a very tradable chart. We got a wedge bottom, we got a wedge rally. It's definitely a tradable chart, and it's basically mirroring the 30-year Treasury bond interest rate. And, it's an upside down version of the 30-year Treasury bond futures. So, yes, you always hear people on television talking about interest rates. I always hate that. You're on a trading show like Fast Money or Options Action, and you got these clowns going on talking about interest rates. We're not trading interest rates. We're trading, bonds or futures. And if you're on a television show that is about trading, don't talk to me about something that I cannot trade. I cannot trade interest rates. All right, I cannot buy the 30-year Treasury bond interest rate. I can buy the bond or I can buy the futures, but I cannot buy the interest rate. I am not interested in interest rates. I'm only interested in things I can trade, which are bonds or ETFs that do the opposite. If you want to be trading the interest rate, you look at something like the TBT, which corresponds to the 30-year interest rates. Okay, where do you see bonds for the next couple of years? Well, that is a really interesting question. Okay, monthly bond futures chart. This is one of the most incredible and clear price action charts that you'll ever see. We have a parabolic wedge here, 1, 2, 3, a bigger wedge here, 1 or 1, 2, 3, a bigger wedge here, 1, 2, 3. So you have a nested wedge pattern in an extremely overbought market, tight channel that's going on for a lot of years. This is about 15 years, but spike pullback channel, another spike pulled back to a little bottom channel. Anyway, the big thing, I've written about this in the weekend blog. I write about it a couple times a year, and it's a nested wedge, and that's a higher probability wedge. A very strong reversal down. We have four bear bars, 2 are big bear bars closing on their lows. We have a wedge rally here, wedge lower high, major trend reversal, head and shoulders top, left shoulder, head, right shoulder. While most major reversals have a 40% chance of leading to a bear trend, this one I think is higher, 50%. And I think that this is the high in bond prices, the low in interest rates for the next 20 or 30 years, probably for your lifetime. And so what I do think is interest rates are not going lower, but we could go sideways in a tight trading range for 30, 40, 50 bars. 50 bars, this is a monthly chart, 50 bars, 60 bars, be 5 years, all right? So while I do not think interest rates are going lower, we could stay at the current level for years. 30, 40, 50 bar tight trading ranges are pretty common in any market. And therefore, interest rates could stay where they are, for many years. However, I don't think the bond market is going above this. I don't think interest rates are going lower. And I do think they're going higher. And I do think the bond market is coming down here at a minimum. Spike, pullback, channel, wedge, 1, 2, 3. And we'll start getting measured moves down. So we got a lower high major trend reversal, double bottom here. That's one target. And then this breakout, another target. And then, this rally, another target. So do I think we're coming all the way down here? Yes. All right. Probably it might take 10 years to get there, but for example, it took 10 years to get from here to there. It'll probably take 10 years to get back again, but I do think we'll get back there. Probably after my trading career ends. However, as I've said many times over the past several years, the bond market is putting in a generational top. And so for your trading career, your home ownership career, the next 20 or 30 years, interest rates are going to work higher and bond prices are going to work lower. There'll be very strong rallies in the bond market during that time, just like here, there were very strong sell-offs. It doesn't look like much on the monthly chart, but these were very strong sell-offs. And likewise, there'll be very strong rallies. This is one, for example. It's a 10-point rise in the bond market, and it's been going on for a year. So, we'll get many of those on the way down, but I think this is the top in the bond market for the next 30 years. What about the next year or two? Well, I don't think interest rates are going much lower than they are now, because this is probably a bear rally, a lower high in a developing bear trend. So interest rates are probably not going any lower than what they are now. This is probably going to result in a lower high major trend reversal, and the market will probably never get back above here, not for 20 years. We may get up to it. For example, we could enter a tight trading range and get back up to it 2 or 3 times over the next 5 years, but the chance of bonds going much above this is small. Everybody knows it, and whenever everybody knows something, it creates a possible black swan event. The exact opposite can happen. Right now, this is a bear flag after this bear reversal. We could still get a bull breakout, but even if we do, we'll still get some kind of a double top here. Maybe a little bit higher, but a double top. Sometimes when you get wedge tops, the market reverses down, but then goes back above the wedge. And if that were to happen here, I would say 40% chance we're going higher, 60% chance there'll be sellers above this high, and that will be the start of the bear trend. So either this is the start of the bear trend in bonds, or we go a little bit higher and then the bear trend begins. You can never be 100% confident, but I'm 60% confident. All right, we have interesting things coming up this week. We have the FOMC announcement on Wednesday, and then the unemployment report on Friday, and then potential political surprises along the way. But you got to trade each day as you see it. And remember a few weeks ago, all the days were so tiny, 5-point sideways days, and I said that don't worry, we'll start to get swings again. Well, we're starting to get swings again. Okay, hope everybody has a good night.